Hey, everybody. Welcome to the show. Hans Albrecht here with Options with Hans. 15 years pro market maker, and then another 10 years after that trading income funds, downside protect funds. So let's take a look at markets today, right after we establish that it is your trade and your responsibility. If you're okay with that, keep watching. If not, we'll see you next time. So let's take a look here. On our Turbo Trader dashboard, we've got Google has gone a little bit yellow. We're going to talk a little bit about MAG today because some very interesting things are happening. Not surprising if you've been following me for a while, but we can see that we're still nice and green on the indices. We're going to talk a little bit about the alpha momentum area here and what we're seeing in there, but there's definitely that broadening happening. The broadening is happening, and this is not just one day. This has been happening for a little while. And let's take a look at, if you take a look at the performance of IWM today, I think we may be hitting all-time highs. Oh, we're not quite. We're pretty close to all-time highs, yet at the same time, let's take a look at the NASDAQ. So the Qs, which is the NASDAQ 100, a little bit of a breakout yesterday, right? Trying to play catch up with the other indexes that have been making all-time highs. The Dow's been making all-time highs with all the wonderful diversified nature of that index, which has been kind of cast aside in a sense for years as growth really outperformed, even though it has some growth names in there, right? They reconstitute it, they add names, and they kick out names to more reflect modern times, and that happens. It's a little wonky in the way that it's priced, in that it's price weighted. So Goldman Sachs, because it's $950, has more weight than a stock that's $100. So it doesn't make any sense in that respect. But look, we have this NASDAQ starting to break out a little bit. What we really have lately is a divergence that is really starting to become very, very clear. Google is the one outlier because I think they're, as I've been saying, my favorite AI stock in the world, one of my favorite stocks in the world, all-time highs again today, this morning, on an intraday basis. Meta is looking like hot you-know-what again as it starts to break down through this 640 level, and I think that does bring 600, sub 600 back into the picture. It just has been the one that's come back a little bit, but it's really not doing that great. So it doesn't have the ROI, the AI sort of plan that investors are wanting to hear right now. And quite frankly, it's in a sense, even though it's undervalued from a sort of multiple standpoint, it's kind of the weakest, right? It's sort of the weakest of the bunch for now until they figure things out. Apple's been coming off a little bit lately. I'm a little disappointed there. It's one of my faves going into that AI in your pocket theme. And I think it's going to be a good year for them next year. But some talk that they're having some problems procuring memory, and that's really become a big deal, right? We've been watching the Micron, SanDisk, Seagate, Western Digital. These are the memory names that I've been talking about for a very, very long time. Of course, giving back a little bit, Micron, I saw somebody finally move up to a buy this morning on it at some house. I'm like, really? It just doubled, and now it's a buy. So anyway, I think this has a little digestion. I said the other day, I put on Twitter, I said, I think we're going to see a rotation out of Micron a little bit, just because it's about 40% above its 50-day moving average. And that's just a little bit extended. Absolutely, it is not an expensive stock based on forward earnings, et cetera. And it's certainly in the right place at the right time, given the massive shortage. I mean, massive shortage, and the pricing power that these companies have to basically charge whatever they want. But the problem is some companies are going to have trouble with that, right? Take a look at Dell, for example. It is a bit of a disaster. I think there's going to be a big equipment upgrade, but if companies can't get the appropriate equipment, the bits and parts for equipment, then it's a problem. So I think this is going to be a year of a lot of positive things. It's going to be also a year of shortages, bottlenecks, and things kind of playing into various ways into maybe creating difficulty for this build out in a sense, and for the things that people want to do, which is, own all the toys, own all the things that are going to take advantage of AI. And that's a problem, right? So this is going to be a little bit difficult to predict in a sense, but we'll see how it plays out. So I want to show you We can look on the thing. We've got Alphabet in income mode. I've got a couple of trades on there, as well as a turbo trade. We put a turbo trade on there, which is working out as we start to make new highs. You have to be very, very selective about these trades. I put out a video talking about how I think this is going to really be just a little bit tricky today, and I'm going to go over some of the things that I'm noticing, that I've been mentioning on a few shows, that give me a little bit of pause. So let's take a quick look at those. Just quickly for those who missed it or didn't see it. So we've got very, very strong winning streak, one that we haven't seen in a very, very long time, 2018, on the monthly winning streak for the S&P 500, which of course is 50%, 50 to 60%, those big, big companies, not just tech, but we know Amazon's tech, we know communications is, and Meta's tech, Google's tech. So, and we see this very strong sentiment that has finally turned around. Literally, it took them about 1,500 points to turn around and be positive. Hedge funds are all in. Analysts are all predicting upside, which I don't disagree with. I think the market's going to do okay, but I think it's what's happening under the hood, right? It's how does this play out over this year? It's going to be a dispersion again, which may sort of belie what's happening underneath the hood, which is a lot of sort of movement within sectors and areas and even subsectors. So we can see a lot of optimism out there suddenly, and cash at very, very low levels. So it's for these reasons that I feel that we're probably a little bit in a bit of a trading mode here. But what we are seeing is movement. Undoubtedly, we're seeing this movement that I've been talking about. I've been positioning very heavily in IWM, looking for this move. And I think mid caps are going to be good too. So let's take a look at some of the things that give us an indication of what is happening out there. So number one, let's look at small caps versus QQQ, right? So think of this as the broadening out of the economy, the things that I've been talking about. As AI works its way into other parts of the economy, we're going to rediscover companies that are trading at reasonable valuations and that have the potential to move the needle, right? To improve margins, to improve their business processes. We don't know exactly who's going to do it. So at this point, I've chosen to kind of go broad in an IWM, but I'm going to start to dig down into the mid caps, the small caps, and really continue to look for those areas like the SanDisk I noticed earlier in last year. That's sort of, it's had its run, right? Because of the memory thing, but I think there are going to be lots of interesting things that are going to catch this wave of broadening, and they're going to be in some boring areas, right? So let's take a look at this one now. So this is mid value versus growth, so versus mid growth. So look what's happening. We see this mid value starting to go. So I think there's some interesting things going on as growth starts to pause, and we can see that right here. So look here, we've had this nice long downtrend since the sell-off in April of 2025. And this is where they really threw out value, the broadening concept. They really tossed everything out where it was tech and nothing but tech and mag and everyone going bananas for AI and the way inference plays out, which I told you about back here, but they finally threw in the towel and everybody went all in. And then here we are as the rest of the world. So nice breakout here up to this traffic jam, comes down to the 50-day. Now we're pushing. If we get through here, this could very well be an interesting run in the sort of, I call it value versus growth, but really it could be any area of small and mid that really has been underserved from the investor, right? There's sort of areas of even growth because AI is not stopping. There's going to be opportunity everywhere, not just in a sort of so-called value area. There's going to be opportunity out there in areas of growth within other parts of the mid, the small, even large cap that they've just kind of ignored, right? Companies that are doing great and that are going to be doing better that just have been ignored because it's all been about the same usual very, very large cap names. And so that's where we start to see a very, very interesting divergence happening here. So this is what I'm talking about. Here are your small caps versus the Mag 7, right? So you can use mags as an ETF to look at what the mags are doing, Mag 7. And so we can see here, even though mag's a little, bifurcated right now, right? I talked about that a month ago. I said, listen, they're not all going to do great. They're going to be some like Google that really have potential. But look at here, we've got this beautiful, beautiful move. Now, has betting on has betting on small caps been a great bet over the last few years? Not exactly. Not a durable trade. But as I've been saying, I said, listen, if there's one situation where it can make sense, and it doesn't need lower rates. I said, it doesn't need lower rates. This is about AI. AI is bigger than the financing aspect of rates coming down and helping small cap and mid cap. Yes, that's important. That would be wonderful. If we see that, then they're really going to rock and roll. But we don't need that. The benefits are coming now. As I said on my other show, I said, listen, if we just stopped LLM progress right now and didn't invent another thing, didn't improve anything, we would have probably 10, 15 years of benefiting from what's been created in the last 2 or 3 years in terms of where we're going to create productivity gains and all that stuff. So look at this, the smalls starting to break out here. Can this be a brief move? I don't know. Maybe we get back up into here. This is kind of where this ratio maybe could stall out a little bit. But if you really and truly believe that the world is changing as I do, I go back 3 years. Look at this versus all about big cap tech. Now, I'm not saying big cap tech is going anywhere. I mean, they control everything. They are everything. But the problem is they're a little bit on the higher valuation side. We have some competitive pressures, and we have some of these bottleneck problems, right? They're starting to issue some debt. They're maybe going to have trouble getting enough power. They're maybe going to have trouble getting enough memory. There's a number of things that are less clear. But what is more clear is that we take what we have created now, and that is undoubtedly going to be an advantage to millions of companies and millions of people out there. Undoubtedly. Some will screw it up, some won't do the right thing, some will take advantage to the fullest extent, but undoubtedly this is going to help a ton of people. There's going to be massive compute usage. There's going to be massive amounts of data being created. There are going to be companies out there that take all this and help you to transform your company, like some of these data stocks. So that is undoubtedly going to happen, because this isn't stopping. This absolutely is not stopping. We're early innings into how this plays out throughout the economy. What is less certain is, is this GPU going to beat this GPU? Is this guy coming up from behind? Are we going to have some power issues? Are we going to send data centers to space? I don't know. What does that do to data centers? What does it do to cooling? What does it do to all these things that we talk about all the time that I think are still extremely important, but they're less certain? And we have a whole part of the market that is now trading at a reasonable valuation. So, of course, we've seen tons of money go overseas to other countries. They all had fantastic years, better than the US in most cases. But you can find value here, and I think that is what this market is doing. Here is your Dow, your diamonds versus the SPY, right? So here we go. Now there's some overlap in there. You've got some of the big tech in the Dow, right? But at the same time, you've got other things like you've got materials, you've got Goldman Sachs, you've got finance, you've got banking, you've got Boeing, you've got a very, very beautiful diversified portfolio. Coca-Cola, you've got some consumer discretionary. So it's very much real world, whereas the last 2 or 3 years, we've seen a lot of kind of that one world really benefit from all this stuff. Here is your breakout. I've been talking about this one a little bit lately. So here we go. This is that traffic spot. If we can get above here on this market, on this equal weight portfolio of S&P 500 versus the S&P, this is where things start to get interesting. So it's happening in some ways, but we're on the cusp of something that could be really, really massive. And that's why I'm really excited. Now, one of the reasons that the Turbo Trader scandal is really great is because it finds trends before they're talking about it on CNBC, before you're going to start reading about it. Some of these things you're not going to hear about for a long time because people can't get off the Microsoft horse, right? So we look down in here, we see communication services, okay, that's a little bit patchy because you've got Meta, which I'm not a huge fan of, and you've got Google, which I'm a huge fan of. So it's a little difficult one. Consumer discretionary coming back on board, right? Everyone thinks that's been left for dead. We thought, oh, big recession, nobody's going to spend money anymore. We're seeing some of those names come back. I think there's opportunity there. It's not my favorite place to be. There's opportunity. Energy is tough. Financials, look at that. This is why we've been positioning in financials, in Leaps Trader, and in in Turbo Trader. Just a great place to be. Materials as we build out this world. Industrials, got to see that look a little bit better. That's not quite there. Information technology is in the doghouse, right? It's in the doghouse. My squeeze ratio, animal spirits money in the doghouse, right? There are going to be some little areas there that look good. I've been buying some Cypher. I've been buying some rare earth. I mean, there's opportunity, right? It's not to say that an entire world is now going to be out of favor. There are still very, very important things going on, and power shortages and things like that. These are going to be real problems. So, I kind of like that straddled world of like a GEV, right? GEV, I think right now, nice income trade there. We've got that on. We're up a whole bunch on that. I might close that. We've got some interesting things that people, if you look at the ARK, what is it? Not G, but there's ARKQ. One of those, or Robo, or bots, one of those ETFs, you can see the AI joining with the physical, which I've been talking about as well, is starting to become more of a reality as we start to push AI out into the real world, into devices and robotics and sensors and everything around you, your toaster, your toothbrush, you name it, everything's going to be AI, right? And so that requires a whole new set. So the build out is not done. It's just that some of the low hanging fruit are the stocks that have been ignored for many years, and I think that's very, very interesting. Robinhood, disappointing. I think we also have bearish income trades on here as well. So we've got bearish income trades in some names. We've got a whole bunch more that still look good. Freeport, some members have been doing really well on Seagate, on I think it was Western Digital. So you get the scanner, you get your login, you get to take a look at what this is looking at, which is technicals, fundamentals, flows, big money flows. You've got option pricing. You've got the stuff that has been in my head for 30 years, and I'm releasing to everyone. I'm so excited about this thing. So look into it. I'll have a link below where you can reach out to us. You can talk to somebody on the team if you're interested. If not, I hope to keep delivering value in these videos. I'm going to try to do a few more of them and expand your horizons, right? So take something like this and take a look at what's out there, right? We always focus on the Googles and the Metas and the Netflixes. I think Netflix is getting kind of cheap, although YouTube's a bit of a threat. But I think it's a different company, right? I'm going to be adding some Netflix just because I think it's interesting. But I have put in massive amounts. In one of my trading accounts, I put in about 448,000 into IWM over the last month. And I just really feel that is kind of until we start to see certain subsectors really kind of take the baton within it, I like that broader kind of approach. But consumer discretionary, here's Amazon. I think we've seen that doing well again. Tesla's in its own world, but Google, GM, Ford, look at restaurants. I mean, you gotta be careful with discretionary. Staples, not so great right now, but they have hammered Costco. So I always love Costco. And I don't think you can go too wrong with some of these areas here, right? I mean, you have to remember that AI is the most vertically integrated blanket sort of technology that we've ever seen. It is big. Andreessen just came out the other day. He's not the first. This is way bigger than .com. This touches everything. And so you got to be excited about AI, but also AI adjacent, AI, everything's AI, right? Why did I love Goldman at 550 and now it's almost 1,000? Because it's AI, it's deals coming up the wazoo. I watched the lady from the Hong Kong Stock Exchange the other day. She says they've got 300 deals just waiting in the wings. Deals, IPOs. I think you can own the exchanges. I like NASDAQ. I like ICE. Lots of great stuff. Lots of great ways to play this Roaring 20s scenario. Stay with me. Set your alarm on the videos. Subscribe if you haven't already. And have a fantastic day. And we'll see you next time.